Stephanie, welcome, number
Hi.
one. Number two, we've got on the one hand economic data coming out, inflation numbers and so forth. On the other hand, we have earnings coming out. And the two, they could be at war with each other. One will, obviously, the inflation numbers will affect interest rates. The other is the real engine of stock price gains, and that's earnings. Talk us through it.
Yeah, it's going to be a really busy week with both factors, as you mentioned, Tyler. Obviously, everybody's talking about the CPI number and the headline being 6.2%, core at 5.5. I think what's going to be more important in the CPI is the breakdown between goods and services. Goods, we know we are seeing disinflation in goods, and services, I think it's going to remain very strong. And of course, the services component is 73% of core CPI. So it's a much bigger factor when you look through the details. But of course, we also get PPI. We also get retail sales, industrial production, housing data. So it's a really busy week. And you're right, I think that's going to set the tone. And then we have to focus on earnings because basically that's more important in terms of how individual stocks move and react.
What are you looking for in earnings this year? Are we in a kind of, not an earnings recession, but maybe so?
Yeah, I mean, I think expectations are for flat to up 2%. I actually think the numbers are too low, to be honest with you. I'm not saying we're going to grow double digits, but yeah, well, because I think number one, I think the supply chains actually get fixed, right? I think inflation is coming down in certain pockets, especially on the commodity side. Companies have pricing power to offset the higher inflation. And I think also what's not really taken into account is the weak dollar. The dollar is down about 10% from its high. And we know U.S. multinational companies have really been struggling with this. So that's going to go from a headwind to a tailwind. And so I think, look, the first half is going to be tough for this year, but I do think the second half will see a pickup.
Interesting. Okay.
And on that note, Stephanie, earnings this week, we've got Lamb, Deere, Zoetis. I know you like Zoetis. I think you like all of these companies, if I'm not mistaken. So what do you think is the most important barometer?
Well, I think they all have important pieces to them, right? So Applied Materials I watch because, yes, I own Lam Research. It's 3 multiple turns higher, though, than Lam, which is why I like Lam. But these guys actually, I think, are going to hang in there pretty well because Foundry and Logic, Kelly, is about 70% of total revenue. That's held up better than expected as compared to memory, and which is one of the reasons why Lam is lagging Applied Materials. But I like both companies, and we'll hear a little bit more kind of about wafer fab equipment spend because that's what these stocks react to. I don't think it's going to be good. But if the stocks actually rally on the news, then you know a lot of bad news is already priced in. Deere, the biggest question really is just precision ag farming. It's technology implemented into farming, and that has implications for recurring revenues to actually see an increase in recurring revenues. And I want to get a sense as to where we are in the North America ag cycle. I think it's more elongated because of this technology component. So I expect a very good quarter on Friday there. And it is Zoetis, yes. I mean, it's a personal favorite with 1 dog, 3 cats. I think animal health, the total addressable market is 43 billion, and I know I'm contributing to that, but it's going to grow with a CAGR of about 10% for the next decade. So I like what I see there. And what's important on Zoetis, actually, I think their organic growth is being held back because of the supply constraints as well. So as that eases, I think companion animal can grow double digits. And so the only problem with Zoetis, it's a little expensive on a valuation basis, but I do like it for the long term.
Sure. I mean, this goes back a little bit to what we were saying in the past about this confusing market. You know, we're wondering if we're even in an earnings recession. We're wondering if CPI, hot and cold. We're wondering where we're going with sort of the terminal Fed funds rate here. And what analogies would you draw from this year to the recent cycles that we've been through, if any?
Oh, my gosh. I mean, well, this year is really hard. I mean, last year was really hard, right? But this year is really hard because you have so many cross currents. I mean, as I mentioned earlier, I mean, like, we have so much data that's coming out this week. We know manufacturing is probably in a recession, although interestingly enough, we're not hearing from it from companies. But and we have housing. We know housing is weak. On the flip side, you have strong jobs, right? And that's really fueling the fire and the engine for the economy. So a lot of cross currents. I think it's a really good idea to be just a stock picker and focus on fundamentals, and that's why I brought to you three names that I'm focusing on.
Yeah, 1,000%. Stephanie, thanks.